Want to avoid the costly blowups that ambush Iron Condor trades? I've uncovered the unsuspecting triggers that catch even the most experienced traders off guard. And so in this video, I'm going to show you exactly how Iron Condors can explode and the proven steps to keep your strategy safe and profitable. So what's the first way that these trades can blow up? It all starts with the strike prices that you choose. If you set your strike prices too close to the current stock price, you're basically daring the market to hit you. And trust me, it doesn't take much for things to go sideways fast. Here's how this risk sneaks up and what you can do to avoid it. Jumping in with strike prices too close to the stock price is like walking up to someone at the bar and diving right in without reading the room. You might get turned down real fast. With Iron Condors, picking strikes that are too tight means even the smallest move in the stock can trigger your short options and turn a small trade into a big loss. So how do you avoid that? One easy fix is to use the delta value as your guide. Instead of randomly selecting strike prices based on feel, choose your prices with deltas around 15 for the contracts you are selling. This is going to give yourself some safety from normal price swings. And when you have some breathing room, you'll avoid the stress of being too close to the danger right from the start. So you've set your strikes wisely and dodged that first risk. But there's a second mistake that can blow up your Iron Condor just as fast, and that's biting off more than you can chew with your position size. Let's talk about why trading too many contracts can be a recipe for disaster. Buying too many contracts is like ordering a massive plate of sushi when you're only a little bit hungry. At first, it feels exciting. Maybe you'll maximize your profit, but if something goes wrong, the loss can be way bigger than you expected, and suddenly, what looked fun is now terrifying. With Iron Condors, using too large a position for your account can turn a small, manageable mistake into a massive setback. Instead, keep your trade size to just 1 to 3% of your overall account. That way, even if the stock does move against you, your losses are controlled and you can keep trading with confidence, not panic. You've learned why less is more when it comes to contract, but there's still another silent killer that can ruin your Iron Condor: going for expirations that are too short. If you're finding these tips helpful, hit that subscribe button so you're always a step ahead. And now here's what happens when you don't give your trades enough time to breathe. Using a very short expiration is trying to like squeeze into a front row parking spot. There's almost no margin for error, and one small misstep can cost you big. Daily or weekly expirations make your Iron Condor so sensitive that even the tiniest of price movements can spike your losses fast. Instead, aim for around 30 days until expiration. This gives your trade time to ride out the normal price swings and takes the stress out of watching each tick away. Plus, with more time, time decay, the way options lose value, works more gradually in your favor, so your position is more likely to hold up. So you've picked the right expiration and given your trade room to breathe, but markets don't always cooperate. Sometimes a sudden news event or big earnings surprise can send the stock racing in one direction, threatening one side of your Iron Condor. Here's how to recognize when you're in trouble and what to do next. Selling an Iron Condor at the wrong time is like carefully watering all of your plants only for a sudden downpour to just flood out your garden. All your planning goes out the window and you got to react. If the stock suddenly surges towards one side of your trade, you can get hit with losses even before you've had a chance to pivot. To avoid this happening, focus on stocks that have been moving sideways for a while. These are less likely to surprise you with a big breakout. And always have a plan for when things go wrong. Know in advance if you'll close one side, roll the position, just meaning you adjust your trade to buy more time or space, or just take the whole trade off. Having that plan keeps you calm and helps you avoid panic decisions and big losses. Now, even if you pick the right stock and set smart strikes and have a plan for when things go sideways, there's still one mistake that can blow up your whole strategy: trading without risk management. Because no matter how careful you are, the market can always surprise you. And if you don't have clear rules for cutting losses, a single bad trade can wipe out weeks of gains. Ignoring a losing trade is like hearing your car making a weird noise and just hoping it'll fix itself. Usually, it only gets worse. Too many traders let Iron Condors run unchecked, believing the stock will come back. That's how small problems snowball into major losses. If the stock moves against you and breaches one side of your trade, don't just hope for the best. Take action, close the whole trade or just the threatened side to limit further damage. A simple rule of thumb suggested by veteran trader Gavin McMaster of Options Trading IQ: consider acting when the stock has moved halfway, about 50% towards one of your short strikes, instead of just letting the trade sit. Having a risk management plan is your safety net, but there's another mistake that can blow up your trade, setting your strikes way too far apart. Want to make sure you catch every critical tip like this? Hit subscribe right now and let's dive into why going too wide with your strikes can actually hurt your Iron Condor trades and how to get it just right. Choosing strikes that are too far apart is like building a bridge that's way too long and just flimsy. It might reach the other side, but the slightest storm can bring it down. With Iron Condors, wide strikes mean you are risking a lot for only a tiny bit of profit. It's tempting to think more distance, more profit, but in reality, wider strikes make you more vulnerable to sudden stock moves or spikes in volatility. Instead, tighten your strikes to $5 to $10 apart and focus on contract with good open interest. 500 is good, over 1,000 is better, and just means lots of people are trading these contracts. This way, your trade is structurally stronger and your potential reward is closer to the risk you're taking. So you've got your strikes in the right place and you're trading contracts with plenty of action, but there's another hidden danger that can hit out of nowhere: massive volatility spikes. These sudden surges can send your Iron Condors into chaos, even if everything is set up perfectly. Here's how to spot volatility traps and the steps you need to take to keep your trade safe when the market gets wild. When volatility jumps, option prices rise across the board. For an Iron Condor, this means the options that you sold suddenly get more expensive and your trade can show a loss even if the stock price barely moves. Picture your Iron Condor as a fence around a yard with a sleeping dog. Normally things are calm, but when volatility spikes, the dog wakes up and starts leaping at the fence, putting your trade under pressure. Higher volatility means a greater chance the stock will breach one of your short strikes, turning paper losses into real risk. But here's how you can manage it. Before the trade, avoid extremely low price premiums and check the IV rank, which tells you if volatility is high compared to the past for companies you're trading on. During the trade, watch the VIX or the VIX index, the market's volatility gauge. If it starts to spike, be ready to close the threatened side of your trade with the whole position to limit your loss. This way, you're not caught off guard when the big dog wakes up and starts testing your fence. You've just learned how to sidestep every Iron Condor disaster, even when volatility goes crazy. But theory only gets you so far. If you're ready to see it in action, smash that subscribe button so you never miss a trading tip and jump into the next video where I show you step by step how to set up an Iron Condor inside the Interactive Brokers platform.